So basically, you need a 4-point to define a trend as a technician. All right. So we call ourselves a chartist or technician, technical technician. So a downtrend, it's when you see a high is forming lower, two high is forming lower, lower high, H1 and lower high from H2 and lower low from the low and the lower low L2 from low. So this is a downtrend. So okay. So normally how we do trend line, okay, trend line of an uptrend we draw at the low. All right, that's a uptrend. This is a uptrend line. Okay, just let me change the color. Green, okay, uptrend. And downtrend line normally we draw at the top, at the high. Okay, I'll put a red color. So now you all know. Okay, so I just try to put it very simple to understand, simplified version of the market structure. For us take like, I don't know, maybe 10 pages, to explain trend and market structure. But for me, I try to put it very simplified, so put it very simple for you to understand. So this is the basic that you need to know, that you need to memorize by heart. If you cannot memorize it by heart, you have to stick it somewhere. Okay. Forming this higher low probably take candles. It's not only one candle, it's many candles. Later I'll show you a chart. We'll do a live chart later on. I have actually selected some of those most popular chart like Supermax, Top Love, HLT Penta, and recently you see rally in this palm oil stock, and also oil stock. I picked hibiscus and also D-Sonic. Okay, so that's all. Okay, that's all. Let me put the text here. Okay, sideway or range. Okay, I put this orange color. Yeah, not going anywhere. And this one is downtrend. Okay, so far the market structure that we've gone through just now. Basically, they are the puzzle piece. The puzzle piece of the of this uptrend, sideway, and downtrend. When you combine them together, they are broken down into pieces. I will call it pieces. Try to put that for you all to see. Okay. So now you all understand. Do you understand? If you can't understand, you let me know. One. Okay. The how to say the structure of the market structure is actually basically the bit of pieces of the of the structure that I'm showing you here. Okay, you're combining the uptrend, then you get in advancing phase. You combine this H sideway, then you get an accumulation phase or even a distribution phase. Okay, you connect the dot for this downtrend, forming lower low and lower high. You get the downtrending phase of the market stages, and we call it declining stage, where this is actually where the trader or retailer, okay, loss. At the top distribution also, probably I will look at this. Many retailers will start in this phase is because they do not know what is technical analysis, and normally by the time they know from the news that the company is doing very well from the newspaper, then everybody is talking about it. Then they came to realize that they need to join the trend. But they don't realize that the trend is really matured, and then the insiders start distributing at this stage. I mean, the stock trading is a very cruel thing. a cruel mean because you do not understand. So as a trader, we must understand what we are doing because we are basically better than the retailer. That's why you all, want to learn, technical analysis, and also want to want to sharpen your skill to trade, have high probability trade in the stock trading or investment. Okay, so I will actually show you some chart. Okay, so before I move on, okay, I'll tell you why in an uptrend traders still lose money. So that's why we have to understand why we lose money. So from the chart, then we'll understand why. When we start jump into the chart, then we'll learn together. Okay. All right. So do you have any question on this uptrend sideway definition, uptrend sideway and downtrend? Any question? If no question, you type 2. No question. You all understand and you have no question, you type 2, and then I can move on.
Steven, just a question. Your chart is a minute chart or hour chart, or what type of duration?
You're still there?
Yes. Hello.
If you have no question, can you type 2? Yeah, I didn't see any response there. Not sure you're listening, you understand or you don't understand, or maybe you walk away or you asleep because of my boring lecture. I know it's pretty dry. Pretty dry is because there's not much excitement. But this is actually, as a trader, we have to know, clearly whether we are in an uptrend or whether we are in a subway, so that we won't be able to trade the wrong position. Okay, I got a question from Matt. Hi CFO, how to know is a fake breakout, and for day trader, which chart time frame we are using? Okay, for fake breakout, I'll let you know why it is fake breakout, because actually there are many reasons behind that. I'll explain it on the chart. So a fake breakout is because maybe you buy at a high and the candle maybe have moved quite some time. Then when you buy, you actually buy at a high. So then the maybe then the price is not able to follow through. Then the price retrace back. Okay, so we have to look at structure whether maybe this price is at the resistance. So if the price is at the resistance, maybe we don't buy. So you have to watch. We have to see what is happening at the chart to be aware what is happening in the past, so that we will position ourselves in case if we are in the position. If it's a fake breakout, we have to get out, and you have to define when to get out. Okay. So I go into that. Yeah, fake breakout, no problem. Maybe I will do a session on that. All right, Matt. Okay, for day trader, what chart time frame we are using? Okay, for day trader, okay, I'm actually looking at the KLSE or our local stock market. In the market, yeah, basically I would look at this as we have 3 types of traders. I think 3 or 4 types of traders. Okay, the one just buy for just a few minutes, or maybe up for 5 bits or 3 bits, then they get out. So those are very short-term trader. So probably the chart they're looking at maybe at 5 minute, 3 minute, 5 minutes time frame. But short-term, I also see people use 15-minute chart to trade for maybe a few hours, like probably like 1 hour. If you trade 1 hour, maybe you go for 50 minutes. If you use 1 hour, maybe you trade for a day, 1 day or 2 day, 1 hour. And for day trader for those swing trader who use a day chart, probably you hold the position for 3 days to 1 week. And of course, like Sam, he is actually a long-term trader. Probably he's also using weekly chart. or daily chart. So these are the time frame there. But if you go with a very low time frame, there are many whipsaw in the market. Later on, I will, if I can, I will show that to you. So the lower time frame that you go, you will have a lot of whipsaw. I will recommend you at least you go for 1 hour, 30 minutes to 1 hour for day trader. Maybe you always close your position at the end of the day, or maybe the next day. 30 minutes to 1 hour will be the best time frame. All right, Matt. Okay, you understand, Matt? Okay, Eddie. All right, let me know, Matt, if you understand my explanation. Okay, for Eddie, is the trend shall we use daily, weekly, or monthly? Basically, I think for KLCD, we do not need to go to monthly or weekly, but sometimes people use monthly and weekly just to gauge the general sentiment of the market, whether it is trending or sideways. So, and then monthly or weekly, sometimes they also use this as to plot the resistance line, support resistance line on the monthly level and weekly level to trade. But I think for KIC, we use daily will be good enough. Yeah, good enough. But if you are trading US market, maybe weekly would be one time frame you can consider. All right, Eddie, you understand? Eddie, am I only one hearing breaking of Stephen voice? Okay, so you understand? All right. Yeah. That's right. We use a daily. Daily, if you need to use a weekly, but I think for our local market, daily time frame is good enough. All right. Okay, I want to confirm with you all whether can you hear my voice clearly or not so clear. If it is clear, then you type 1. If it is not clear and the voice is breaking, you type 2. Let me know. All right, clear. All good. Okay, very good, very good. Yeah, Eddie, maybe you need to check your speaker. Seems that everybody say they can hear it properly. All right. Okay. Good. Good. Okay. So now we will dive into the chart. Okay. Just hold on. Let me. Okay, Supermax. All right. Okay. This is a Supermax daily chart, 1 day, and basically I'm using this the time range. Okay, normally what I do is actually I will try to reset the chart. Resetting chart sometimes give you a better ratio. You are not looking too near to the chart, so you probably get a better view of the chart. Okay, all right. So on this chart, daily chart, I have 3 line here. All right. So the blue line is 20. Moving average, EMA, and I think what color is this? Purple or blue? It's a 50 EMA. And this actually the 200 EMA. It's a green color. All right. You can set up any color you like. All right. Okay. All All right. So when you look at this structure, okay, I mean, we will apply what we learned. All right, we will apply what we learned just now. Okay. Of course, here you can't. You see a little bit up, down, probably up, down, up, down. This is a bigger up, down, and this up, down, up, down, up, this up, down, up, up, down, and this one is going up. Okay. So I've taught you the market structure, right? So you can see from this chart, you want to take advantage of the uptrend from here. Okay, from here, right now. Probably here you're not able to get because the high and low is very small. Maybe you never pay attention. But when you can see the high get higher, the low also get here got low too low and here got too high, then you need to start pay attention on this chart. Okay. So this is actually the phase that you need to pay attention. All right. And like I just now explained to you how you can draw an uptrend line. You can draw an uptrend line like this. All right. This uptrend line just now I teach you how to draw. To connect the low to the low. Okay. Probably change the color to green. Okay. This is a bigger structure. The smaller structure is here. All right. There's a small structure here. And you have another more sharp, stiff structure here. Connect the load. Okay, let me delete this. Okay. All right. So as you can see, we have few uptrend line that this price is respecting. All right. So this one and this one, the second one and this one. All right. So now if you can see this structure, we actually can see one low start forming, right? This L1. Put a red color. This is 2, L2. H1. Okay. So okay, so as you can see, we are very critical at this range here, because basically you look at this. I delete the shorter term trend line. I use a long term trend line. So basically, uptrend line has been broken. So we will draw a downtrend line. Okay, there's a downtrend line. So I don't want to pack it here. I pack it here because this where the the line touch many candle here like this. All right. Okay. Okay. Basically, the structure is like this. This is how I look at the structure. Okay. I mean, I hope the price will continue go uptrend by maybe I don't know. The price might just break up like this. If let's say the price break up this downtrend line, it's a good news. But if let's say price not able to break out this downtrend line and maybe go a bit higher and come down, it's a possible scenario. All right, it's a possible scenario. So we have to wait. We have to watch, see how the price doing at the moment. All right, and then see maybe moving forward next week. We hope that this Supermax will be able to break this downtrend line. Okay, because now we can see some weakness because we see too low and probably too high. If let's say this one continue to go down, then you have the high. If this one go above, then the next high probably is here. All right. Okay, so and I noticed the recent up move, the volume also low. As this price move up, the volume is not that great. Compared to last time this rally, the rally you see the volume is relatively higher, and then is every 1 day 2 day the volume is higher than the next. So that's why you see this is my own. Okay, for your information, this volume indicates my own volume bar. This is how I see buying climax or selling climax, and also trend, and also no volume. Okay, the blue bar is basically is a good bar for me in my definition. The orange bar is a selling climax or buying climax. Normally this prompt to drop in price. You see this one? Okay, this one is the first one you can see here. This one is selling climax. All right, the price drop, the volume go up and form a pin bar, and then when it go down up to this point, you can see there's the volume dry out. So it's indicate in a yellow indication here in the volume bar. So the trend is going up, so the volume move up together with the trend. So you can see this point where the price open low, close low and open high. Then this is actually the selling climax, and then the price drop, and then this is how I use this indicator track. So you can notice that this down move here, then the following up move. Okay, this is good. This is good volume. All right, this is a good volume, but the subsequent volume is not that great because the next rally, or I mean the volume is not so good. So we have to pay attention to this. I mean, I do not know. Now it's just below the downtrend line. So if let's say the trend is strong, I mean, a good sign is actually when this price break above this downtrend line. All right. So you understand? Okay. Can you understand? Yep. If you understand, type 1. Okay. Please explain the color volume again. Okay. Okay. The orange color is it's buying or selling climax. Normally the because this indicator you won't find anywhere because it's my own indicator, my own. I developed this, so you won't find. So but for you to understand, it's actually the orange color. Normally it will actually cause the price to drop. If let's say you see it at the top, and you will see it at the bottom. Normally you see the price will will rally after that. The yellow color normally is no volume. Okay, and also the blue color is a healthy volume. Yep, that's right. I script myself. That's right, Eddie. Yep, that's right. Yep. It's good to understand this one. One more thing I want to show you. You can show the price bar at the bottom. You also can show volume bar. Sorry, you can show the volume bar at the bottom. Uh, volume, and you also can show the volume at the price. Okay, as you can see from this rally. Okay, this rally, the second highest volume is here. It's around this region. This is the highest volume exchange at this volume. So if this volume, if the price will be able to breach this level, the highest volume here, it's a good sign. But let's say if the price not able to breach, then maybe it is not so good. Yeah, I mean, from my view, this kind of large volume, on price, if it is, it can show you a good resistance or support. All right, you see at the bottom, when the price at 3.855, right? This is the largest volume, but in this chart, you see this range. Okay, this is where sorry. Okay, you see this range, highest volume, right? When you look at the chart, this is where a lot of people are buying or supporting this price at this level. So probably if let's say this price start to break down, we need to observe whether this price will start supporting at this level. I mean, this is the worst case scenario, scenario two. Right now, the price is under the downtrend line. Okay, as we drawn here. So we hope the price will reach above $9. I think $9. Yep. Moving forward, if let's say price able to breach this $9 level and also able to breach this downtrend line, it's a good sign. Yeah, the trend will continue. So, but if in case because we chartists only see the probability whether the price is moving up or coming down, but there's a chance that price not able to break up and then stop by this trend line and start to come down. So we will see. All right, this is a second scenario. Okay. All right. Okay. Let's see. Any question? Consolidation take place at the longest bar for the price of break 859 is good news. Yes, is a strong favor resistance. Next is okay. Yeah, I think of course, yeah, this level is one level you need to watch. Of course, this level also need to watch. But I think this is the major hurdle. The $9 mark will be the major resistance line. All right. Okay. Any question? I will not do any Elliott because if I start to do Elliott wave, then there are many things I need to cover, like the principle, the guideline. So maybe I'll do it next time. So when we have actually more or less cover the basic reading the price chart, from price volume perspective. Yeah, Dominic. Okay. All right. Good. Yeah. So if we have no question, then I'll move on. Okay. So for the side volume, okay, the side volume we can actually get it from trading view. All right. So you go to this indicator, okay, and then once you open the indicator, you will see a volume profile. Volume profile. You click on the volume profile. And then when you have selected the volume profile, after that you go into visible range. Okay, once you select this visible range, then this price on volume on price will appear on your chart. You know, when you plot this type of profile, you know, uh, probably we use this to assess or even to give us some more confirmation of whether the price will potentially give us a strong resistance level or strong support. All right. So basically, you need to pay attention to the high volume bar. This low volume bar, I think not so critical. You have to pay attention at this high volume bar. This one. Okay. Basically, the whole chart, right? The whole chart is actually these two level lah. This one at the $4 mark, $4 range. This one, and the second one here. Okay, this one. So maybe this one not so much. Yeah. This is actually two area that you need to pay attention. Okay, this one you can do it for top loop as well. All right. I don't know. Maybe it's a free tool. I think it's a free tool. Yeah, you can try. You can register an account with a trading view, a free account, and try to see. Go to here, indicator. After that, go to volume profile. Look for visible range. Click it. Then you will have this range. All right. You can try to do it yourself. Dominic, can I ask you how long I have the time to for this second session? How long the time I have? Yep. Okay, no worry. Okay, I do a quick one. So basically, okay. Next one maybe we go HLT. All right, HLT. Okay, when you look at HLT, all right. So if you can't see the structure properly, normally what I do, I will go into maybe 3 hours or 2 hours just to see the structure better. All right. Okay, this one maybe to see the structure better. Okay. Reset chart. All right. Okay, you can see that the price is making higher high and higher low, just like we learned just now. Where's the chart? Yep, here. Okay, see. Of course, these are actually smaller structure. Okay, maybe this one, or this is all gap up. Yeah, then go up. Yeah. All right, and come down. Yeah. I mean, I like this structure. I like this one. Um, okay. You see higher high, higher low, higher high, higher low. Probably you won't buy here. So when you start seeing this is formed, this range is formed. Okay, after this one make a sideways price movement, then maybe we will take advantage of this move here. Yeah, yeah. All right. So so you can see making high. So once the price is dropped, so we can from this price we can draw something. We can draw trend line. All right. Maybe try to learn. Okay, this uptrend line, green, and this one, very steep one. All right. And then probably you can draw another one. Okay, here. All right. This is not so good, because after the price come down, go up, actually make a first lower low. and then first lower high, first lower low, first lower high. Okay, and then the price, So for this one, HLT, maybe I have, I mean, why I say I like this chart is because maybe this price have a potential to move up here. Yeah, maybe they have potential. I only start looking when the price start to move up here. This level, just a bit. Okay, I will start looking at maybe $1.80. I think $1.80. Oh, okay. Yep. I'll start looking at this price at 1.82. Maybe. Yep. So hope that the volume also very good. When you look at this volume, it's also a lot compared to, I mean, comparable to here. So the volume is going up. Okay, as the price move up, and then as it drop, price move sideways, and we can see this big volume, but it didn't drop. So I expect this price to move up. Yeah. I mean, I'm not always right, just to tell you all. I always, I mean, when I'm when I'm wrong, when the price move down here, then I'm wrong. If the price never make it like this, and then if the price like going down like that, if the price go backward instead of go outward, then I'm wrong. All right. So I can put this, at least I know where I'm wrong. So if I'm wrong, if the price move down here, then I stop here. Okay. So probably I buy here. Okay. Then I cut loss here. Yep. Maybe this is my plan for second liner health. The top liner healthcare I have to monitor first because I'm not sure. If you draw a channel, right? This one. See downtrend line. Let me clear all the drawing. Okay. So you see the downtrend line if I draw. Okay, very steep, too steep. Need to adjust. Okay. Maybe this better. See, broken already. Like Supermax, not broken. Remove drawing. Okay. Sorry to watch. All right. Top blur. Same. Yep. Critical. Okay. Also a lot of volume here. This range. Okay. Have to watch whether you'll be able to break this volume. No. That act as a resistance. So Penta wise, price is moving sideways. Like I did discuss this with Sam also. All right. So maybe, so you will maybe see potential trade setup when it start to move above this line. Okay. Okay. Higher. Okay, we have 5 minutes. Okay. All right. Let me almost need to wrap up this one. Okay. And here is cut loss. Here is cut loss. Yeah. Maybe this one better. All right. Okay, so this is actually my presentation. If you look at this structure like I explained before, you see this one, okay? Okay, this one clearly, how to say, this one clearly actually have tell you that this price is subtrend. So I mean, we are not able to bottom tick. We are not able to bottom tick here because we need to make sure that the trend is there. All right, so that's why we always need to confirm too high, too low in order to confirm a trend is intact. All right. Okay, I think that's all from my side here. Um, Anything else you want to ask? Since we have 5 more minutes here, maybe less than that, I guess. Yep. If you understand, you type one. Yeah, good. Yeah. So you always remember to trade in the trend. Don't trade counter trend. You must understand what is a counter trend and what is a trend. All right. For this one, we can. This one is data sonic. All right. This uptrend. All right. Broken. So now it's coming down. All right. Like this. So this is very obvious. Is a downtrend. Um, I think this one maybe will be supporting here soon. Okay, maybe here, coming, very close. Um, so we will see. Okay, we will see. Maybe go up. Those who have position? I mean, I do not know your position. Maybe you need to cut loss. But those you have not position, maybe you can just only start looking this structure when they start to break the downtrend line. All right. Only look at maybe here. All right, maybe at 1.24 level. Only start to pay attention. All right. So we will see. All right. Okay. So if let's say a price breakdown in the downtrend line, then you will probably for us normally for me I'll exit. I'll exit the position. All right. Cut loss 90 cents. Maybe we have to see because yeah, this one critical here. If you cut loss, maybe this level. Yep. Yeah. Maybe yeah, 90 cent. Yeah, I think so. Yeah. But the thing is that the volume is very low. So maybe this one also need to watch Vivo line. Yeah. Fibonacci is very close, 0.935. All right. Yeah, you see, you need to watch. All right. Those who are not no position, maybe can monitor. Those who have position, I think if you cut loss down, it'll be a bit of pain. So you see how the price react. When come to this Fibonacci level, which 0.61 at